Good morning. Welcome to Prop Firm Dreams. I am multi-propping with all your favorite prop firms, and today we are going to be reviewing PropShopTrader. Now, new props are dropping all the time, but what makes this one special is they're looking to compete directly with Apex Trader funding. If you want to get some serious scale and trade 20 accounts, the only game in town was Apex. And if you're like me, and whether you've seen the video of them or heard the payout denials, you're rightfully a little skeptical of Apex at this point. So when a new player comes into the market offering 20 accounts and at launch 90% off,
Shut up and take my money.
That's going to draw some heads. So let's see what they have to offer. They have the traditional evaluation path, the warrior path, what they're calling, and then they have the straight to fund it gladiator path. Evals are 90% off, and the instant gladiators are 55% off. Their main selling points are going to be no barriers, trade anytime you want, market open, news, holidays, we don't restrict you, the weekly payouts. They're offering some of the highest payouts in the biz, so we'll see how that goes. Multi-platform capabilities. Now, as far as platforms go, they created a new platform called TickBlaze. Now, TickBlaze built from the ground up, and I think it's going to be another Project X type thing. You can see their awards down here. Won some global fintech awards in 2024. I haven't used it yet, but looks pretty standard. Like Tradeify, it'll have a built-in copier, so you can trade your 20 accounts for free as well. Offer Quant Tower, multi-charts, Rhythmic, Atta, Sierra charts, Bookmark, and my favorite, Motive Wave. So there won't be any Ninja Trader or Tradeify, which, from what I understand, they're absolutely gouging new players into the space. So I don't expect those things will come. So I don't expect that'll be added in the future. I just want to run through these real quick. They offer seamless risk mitigation. We have simple programs with the easiest risk management rules to pass. They also charge, I should point out, for drawdown protection. Fast track your success, qualify in as little as 5 days. We support both manual and algo traders for your algo traders out there. Unmatched payouts. I think they're really coming at Apex with this one. We offer the most lucrative trader payouts in the first 3 months of trading. As you know, Apex, I think you have to, it's either 4 or 6 payouts before you can get to your uncapped. Trading freedom. We allow strategies and trader types. Remember that, because I'm going to come back to that later. One-step passing process. We keep it simple to get paid. We provide the market data, which is important because some companies out there are still charging you for data, and that can be sort of a surprise when you find that out. Cough savvious. Multi-asset trading. We are a hybrid firm offering futures with additional asset classes coming soon. Okay, so that's interesting. But I did check, and they don't offer treasuries for you treasury traders out there. That's still off the table. Trading precision, you can trade full size or micro lot positions, which just about everyone does, except for Top Step if you're not trading their Project X version. All right, so let's check out the offerings. We got warrior accounts, first step to real prop, follow your path to success. We got the warrior phase, gladiator phase, and real prop phase. Let's start with the evaluations. So before we go on, it's important to notice that one of the hangups with this firm is they have an intraday trailing drawdown. Now, I know TickTickTrader does as well, and people still seem to like them, but I'm not a big fan of them. All right, we got the Warrior 50K starting at $147 a month. Just remember, they have 90% off, so this is $14.70. Same with the rest of them, $19. $39, $49, etc. They have the largest evaluation account at $500K with a massive $24,000 trailing drawdown. Now, what's interesting, I know a lot of people like to go $250K on Apex. Well, what's interesting is I know a lot of people prefer the 50K because of the profit target to trailing drawdown ratio of the 3 to 2.5, which is 1.2, I believe. Well, with PropShop, all of them are 1.2. Typically in the past, if you want to have the best chance of passing, you went 50K, and if you wanted to scale with Apex, you went the 250K, and you kind of just dealt with it, or tried to gamble it up a little bit. Well, take a look over here at the 250K and the 500K. They're both 1.2 ratios, profit target to trailing drawdown. So it doesn't matter which one you pick. It will always be the same ratio. It's just a matter of how much you want to spend and how much you want to scale. Now, just like Apex, The poison pill is kind of on the end. You can kind of buy a bunch of these accounts and pay $14 a month. Hopefully, you pass it in 1 month, and then once you pass, then you pay the $100 excuse me, the $100 activation fee. And if you want the largest accounts, whether it's the 250 or 500, you're going to pay $300 and $400 fee. So you can still be a degen and YOLO a lot of these accounts, and then presumably take it seriously once you pass. Like I said before, data is included, and you can, and the copier and tick blaze is also included. And you need a minimum of 5 trading days. What's not here is the consistency rule. The consistency rule is one of the tougher rules to pass. I think Top Step is around 50%. My Funded Futures is 40%. Tradeify is 35%. And the consistency rule for PropShopTrader is 40%. As I said, there is a minimum of 5 trading days. You need to be meet the 40% consistency rule. And let's take a look at the 50K, since most people are familiar with that. It's very similar to Apex. You need to at least have a 52,600 balance. And unlike other companies, PropShop wants to pay you weekly. So they'll pay you out every Friday if you meet the qualifications. And so there is a payout cap for the first 3 months. And then after that, it's uncapped. And they are a firm that's looking to take you live. So potentially, if you're able to be consistent and get a payout every week, after your first 5 days, you'll make $1,250. Same with your second week, third week, fourth week, fifth week, which adds up to $5,000. If you had 20 accounts and you decide to go balls deep, that's $100,000 in your first month before the profit split. So that's pretty compelling. Even with the payout caps for the first 3 months, you could be looking at 6 figures at the end of your first month if you went the 500K route, which is something that's just not possible with Apex. So it sounds good, but what are the drawbacks? Let's take a look over here at prohibited practices. There's a lot of fine print in these things. Trading expectations, strategy guidelines, gambling policy. They basically, like every prop firm, they don't want gamblers. We're committed to promoting safe and responsible trading. But what are the rules specifically? Traders are required to adopt a defined strategy or system with clear rules for entry, stops, and targets, and adhere to these rules consistently and with discipline. Any deviations, such as impulsive trading based on news, market chasing, or pursuing windfall gains without a systematic strategy, are strictly prohibited. Traders acknowledge these policies as non-negotiable, and the company reserves the right to terminate any account without notice or explanation. Now that sounds like a problem. Now, I'm one of the more disciplined traders that I know, and even I'm not 100% disciplined, immune to impulsive trades. I thought we could trade however we want. But now it's saying impulsive trading based on news or market chasing. FOMO is basically a staple in any trader's toolkit, unfortunately. And even if you're 95% compliant, I don't know anybody that's 100% immune to FOMO. And it sounds like they can revoke your accounts without notice if you violate those things, which I think is pretty unrealistic. It says traders who excessively gamble by going all in for quick windfall gains, thereby jeopardizing the company's risk management procedures, may face restrictions on acquiring additional PTSA accounts until they demonstrate steady consistency. The company seeks traders who employ genuine, consistent trading systems or strategies and eschewing approaches that pose undue risk, such as withdrawal or speculative strategies. So when I read this, it sounds like a different person wrote the ad copy on the front page versus the risk manager, it sounds like, wrote all this stuff on the back end. And seeing how as violating this stuff basically can just get you yanked in what sounds a little bit like a discretionary case-by-case situation, which sounds a lot like Apex, if you're asking me. Let's take a look at the following prohibited practices. Over leveraging. Excessive leverage is restricted. Overexposure. The company cautions against overly concentrating on specific assets or market. Creating a diversified trading approach is essential for mitigating risk and ensuring consistent returns. Are you telling me that I can't just trade one asset class? That sounds pretty suspect. one-sided bets, avoiding making trades predominantly in one direction without comprehensive market analysis. See, again, this sounds like a risk manager talking, someone who's managing a portfolio of lots of different traders. They don't want to be overexposed to everyone going long or short the market. But as a trader, like you said, you just have to go with whatever your strategy is telling you to. And now they're telling you that this is under the prohibited practices. Hyperactivity, making too many trades in a short time or making decisions impulsively. Flipping, engaging in large trading days followed by mere contract flipping to meet minimum requirements for withdrawal. So that's important. So you've got those 5 minimum trading days. You have to make each of them count. So this may actually be harder to pass than the Apex. The company actively monitors all trading activities and actions are taken to ensure adherence to this policy. Any violations will lead to stringent measures, including restrictions on trading privileges and revoking of profits generated through such violations, along with the potential of account termination. So I don't have a problem with rules per se as long as they're spelled out, but there's a lot of gray area for weaknesses. Obviously, if you're running a prop firm, no one wants to get ripped off. Having a whole page called prohibitive trading practices and then literally naming every bad habit of every trader I've ever seen in my entire life, that seems a bit suspect, and like it gives them full license to pull you so they deem something you're doing not to their liking. So there you have it. Apex's newest competitor is also offering 20 accounts, 90% off, 40% consistency rule, the largest account that I've ever seen at 500K, and it still has a 1.2 profit target to trailing drawdown. Offers a staggering $24,000 of drawdown. Times 20, you could start the month with $480,000 of drawdown, which is massive. Even with the 3-month cap, you could still end the month potentially 6 figures richer. Now the downsides. The downsides are the intraday trailing drawdown, which is going to be a problem for a lot of people, in my opinion, and the super sketchy, kind of gray prohibited practices. So what do you guys think? Are you going to give this a try? Let me know in the comments. On the one hand, you got a fantastic deal, 90% off, 20 accounts, weekly payouts. On the other hand, you have the intraday trailing drawdown and some sketchy fine print to look out for. Is this going to be a world beater or merely an Apex 2.0 or worse, a rug pull? If you're going to give it a try, let me know. I'm thinking about doing it myself. I'm kind of on the fence, but I'm interested in hearing what you guys think. Talk to you soon. Peace.